Уважаемые дамы и господа,
Ladies and gentlemen, let's start our session. That is called Attracting Investment, Banks versus, which is a Latin word, originally. And actually, what does this word mean? The word versus means that someone or something stands against something. Against makes our discussion very provocative, especially in the framework of banking forum, because we see here many representatives of investment, banking circles and brokers, etc., etc. So, banks versus capital markets. What is the problem in this? There is this very famous opinion that in Russia we have financial market developing slower than banking loans than the that the issuing actually happens, and that the mechanisms of attracting of investment are suffering from inefficiency, and we have to start thinking about new ones. And there is also securities market that is developing slower. It can be different kind of market, bond market or in debt market. And I'm not even talking about capitalization through the public issuing of shares. I am talking about the primary debt in Russian market and corporations in passive market is about 30%. And I wonder if this is a lot or not. In comparison with Anglo-Saxon markets, this is probably not that much, because there is this tradition of attracting capital through securities, though this is more than in Brazil, than in Germany, for example, as well. You know that for continental Europe, this problem is more relevant than it is even here in Russia. And in order to properly discuss this question, what exactly shall be primer here? Shall we actually stimulate the developing of the public debt? Shall we stimulate this attraction of capital? Another question is that how comfortable this banking debt is, or the share of banking debt will shrink with time. Because I tell you 30%, right? About 8 years ago, this figure used to be 20%, which means that with every year, more or less 1% adds up to that previous figure. In order to cover all of these questions, we have here an outstanding set of experts. And as this topic is quite surprising for a banking, unusual, I'd say, for a banking sector, people here are also very outstanding, and I'd like to introduce all of them. Not all of them you might not know all of them. I would like to present first Mats Isaksson, the head of Corporate Affairs Division, and he represents OECD here. Usually they just say OECD, but I also know the more detailed version, head of Corporate Affairs Division. So he's the one who's carefully looking at what is happening at capital markets. And there are many interesting things happening at those capital markets. For example, the ratio between new listings and delistings in different regions might be very different. Also, there might be different trends in how actively companies are actually coming out to capital markets, or probably that publicity which comes together with responsibility and which complicates sometimes the life of companies actually starts frightening people up. He might also tell us something about so-called private equity, participating in non-public participating in companies' capital. Another idea is very popular here for long-term project, the so-called state development institutes, where even public funds are used. So, Matt, what is happening in the world? You know everything. You represent OECD, and though Russia is not a member of OECD, I'm sure you know a lot about Russia as well.
Thank you very much, and thank you very much for the kind invitation. It's I'm going to take this off. It's a great pleasure to be here. It's not my first time in Russia, so maybe there are some things I know about the country, but you are certainly the experts. Just as a means of introduction, I think Alexander framed the session very well, but I also think that the governor of the central bank put us off in a very correct direction this morning when she made this link between capital markets and the real economy, because she really underlined that the capital markets, as much as we are excited about them, is not really an end in itself. Capital markets are there to channel money for good investments that will increase productivity and that will enable economic growth. They are there to give the right kind of capital in the right amount to the right kind of companies. And that's why we also allow them to make some money in between, because it's a good social function that capital markets actually serve. Once we say that, and Alexander was also alluding to that, we immediately know that there are different kinds of capital. I can tell you that politicians are not really aware of this. Really? They think all capital is the same and et cetera, et cetera. But as economists and market participants, we know that different kinds of capital serve different purposes. Loans have a different function for a corporation than a bond, and a bond has a different purpose than equity has. So just as we heard before, there is really no opposition between different types of capital. They are rather complementary to each other. But one thing we know is that there can be too much of a good thing. And there are actually studies by the OECD, by the IMF, and by the Bank for International Settlements that above a certain level, too much debt capital, too much loans in an economy can actually be counterproductive in terms of productivity. That it actually is a drag on productivity rather than a stimulus to economy. There are different reasons for this. Some of them belong to the story that it sort of ties down a lot of collateral that is usually physical, a shopping mall or whatever, which is not really at the forefront of innovation. Another explanation is linked to the sort of risk profile and risk sort of avertiveness of debt, so they take fewer risks. Anyway, it's not about debt or equity, but it is, and these studies show, that it is about the balance between the two. And I think in many countries today, and countries that I personally work very closely with today, there is a need to re-equilibrate this balance. Actually, there are whole countries, we're talking about companies that needs to be recapitalized with more equity. But there are actually whole countries that needs to be recapitalized with more equity in the industrial structure and in the business structure. And the reason for this is that we want companies to take on more of innovation and research and development. Obviously, the government plays an important role in these risky projects in many countries, but also companies need to participate in this innovation because we believe that they have really the right incentives. I think in Russia, the latest numbers I saw, the business community contributes about 0.3% of GDP in research and development. In Germany, the equivalent number is about 2%. In Italy is another country where it's low, and where we also need to inject more risk-taking in the corporate sector. Coming back to the issue of collaterals, another strong argument for having a sound balance between equity and debt is that more and more companies will build on intangible assets. We may not have these collaterals in terms of machines or buildings or whatever. And lending, and we heard this morning, lenders of debt need to understand how they handle this situation. They're not very good at it. There was a lot of self-criticism this morning. How do we actually lend money to intangible projects of future, in the future digital world? Equity is much better at doing that. If you think about it, a number of the firms that we have seen grown in the area of information technology around Silicon Valley, etc., none of them really got a loan. Maybe the founder used his credit card for a few months or half a year or something like that, or borrowed some money from his parents. But what really made it possible was a promise to these young kids that if only you live off hamburgers for 1 year, I'm not going to pay you anything, but I'm going to give you stock options that you can turn into equity once we have our IPO, you will get rich. So it is a very tangible characteristic of an instrument that you can use both to incentivize people, but also allow them to participate in the risk-taking of the corporation. So with all this praise for equity, it is not a surprise that a number of countries in the OECD area are a bit worried at the moment. Not only that they have few companies coming to the stock market, but they also have two highly leveraged corporations. And I will mention one example a little bit later. Actually, we have seen fewer and fewer companies, as Alexander said, coming to the stock markets in several OECD member countries, including the United States. The United States actually has about half as many publicly listed companies today as they had 15, 20 years ago, about 4,000 compared to 8,000. Very few new listings in London in the last 7 years, if you ask me, in the primary segments. And another thing I think we can see is that the companies, when there is an odd IPO, the companies usually come to the stock exchange at the later stage, and they are larger. So the smaller IPOs that we saw even with Apple at one stage, not to talk about Intel was a $7 million IPO. I mean, nobody would look at a $7 million IPO today. It's not even on the radar screen for an investor. Those are basically non-existent today.
Макс, а почему это так происходит? Вот скажите.
Why does it happen? Why? Just tell me why. In such regions as, well, the US, continental Europe, why the issuers are motivated to leave the public loans, and in Asia it's the opposite. In Asia there's much more new listings than delistings, and the stock markets in Asia say that they have lines of companies waiting to list, to have their IPO. So how do you see Russia in that situation?
Asia is is phenomenal in that sense. I mean, the Asian markets since 2000 have raised $4 trillion from public equity markets, $4 trillion. But that said, a lot of it is in China, more than half is in China. And these companies have, I think part of the reason why they have been able to do it at such a large scale is that the free float, first of all, is fairly small. And the companies that do list still have a lot of debt. And a lot of them are leveraged also with
А Россию вы
corporate
здесь
bonds.
видите?
Russia, how do you think, is Russia closer to the European continental markets here, to the US, or to Asia in this trend? Well, what is the perspective and the promise for Russia here?
Number of listings, and I know there have been some improvements in lately, but after 2007, 2006, we haven't seen much of listings in
Извините, мы уже
Russia.
забыли
So it
про
would be
это.
close. It would be
Мы
closer
как-то
to
в
the European.
18-м живем.
Well, you know, we are living in 2018. We kind of forgot about that already.
Будущий тренд и потенциал.
How do you think, what will happen to us in the future? What is our next steps, and what will happen next to us?
Well, I'm not going to claim to be a prophet of what's going to happen in Russia. You are much better prepared and insightful about that.
Ну вот структуру
But I mean, the structure of our market is closer to the continental Europe or to the little emerging markets, the fast-growing markets.
Well, maybe there are more resemblances to some of the non-Asian emerging markets, I would say. And part of this story to get things rolling is, first of all, to have a credible regulatory framework in place. And I know there have been improvements, not least thanks to the Moscow exchange for that. But there is also an issue about who is going to provide the capital. And if we look at the markets that have taken off in terms of actually welcoming companies to the public equity market, there is often an important role played by institutional investors, like pension funds, insurance companies, and investment funds, mutual funds, etc., private and public. So I think depending on those developments, those are parts of the elements that will decide where Russia will go in this respect in the future.
Спасибо, Мац. Вот сейчас мы вышли в очень важный момент. Ну, как обычно.
Well, thank you. We've touched on a very important topic. Thank you. Family, where's the money? It's always the question. Where is it? And now a colleague, Oleg Zhelesko, managing partner at Da Vinci Capital, who actually represents not only this kind of money, the money that come to the capital market, not via the banking sector. I've never heard about Da Vinci taking out loans in banks. They take their risk, their own risks, and their clients' risk, and bring them into specifically into that sector. Oleg, tell me, please, why? Why do you do what you do? Thank you. Well, just a couple of comments about the general trends. I think the topic of this panel is quite complex and sophisticated because it deals with markets, financial instruments such as private equity, debt, public markets, globally and in Russia. And I was trying to understand what is the goal of this panel. And it is, I think, to show where Russia stands and what will be the trends here in the near future. We are investing in private equity, but we are quite close to the financial infrastructure, since we have invested into the stock market and Moscow exchange and minor platforms. Now we invest more heavily into global companies, and we do the cross-border investment. For us now, as private equity investors, what matters for us is to have access, capital markets, equity markets. Let me explain and how I see the trends here in Russia, Russian trends. The global markets, I was quite surprised by my colleague's statement when he said, well, we do keep track of the trends. In 2017, there was a record on global IPOs, about 2000, and in the US there was a record on the IPO. The markets are cyclical, and 2017 was a big year for IPO. So the global public markets, US, Hong Kong, and London, for the 2018, the prognosis is quite positive. Secondly, the multiplicator according to which companies are traded on the global markets are very high. They have peaked, and many investors are afraid that the markets are overheated. And for private equity investors, this is a complementary class of assets to debt and to IPO, because I think going public for a company, it's one of the very important elements of our strategy. Then selling to the strategists, and then we see very positive trends on the private equity market. Last year, again, record number of money has been raised. We see lots and lots of liquidity in the global system. There's not so much liquidity in Russia in terms of long money and long-term investment, but that's still a question of the the whole situation in Russia. We see that the global public market are in a good shape. Maybe there are fewer minor companies, but now there are more cross-border IPOs, and the US still is the largest market for good IPO, for global companies, and many companies from emerging markets really want to make the IPO there because the multiplicator is the highest there, and you can get a lot of investors, specialized funds, the ETFs, private investors. Well, sorry, I'll interrupt you. Let's discuss the issuer's motivation. You said that your interest is to come at the pre-IPO stage, then lead the client to IPO. The first thing you said is that to get access, to get exit, well, you didn't mention that, well, you didn't want to share the upside with the other market participants, I suppose. Well, upside here is a very private, particular thing. Private equity funds are, find a small number of private companies that we can support and help them grow into larger companies. We believe in companies with high capitalization, and in terms of the owner or proprietor, from proprietor's perspective, letting in a private equity fund might not be might not be a good idea. Well, but from the perspective of your clients, the issuer, when selecting between various forms and instruments, you advise them and consult them. You have to understand their motivation very well. The eternal alternative between issuing shares, have an IPO over time, take a banking loan, or issue a public debt or private equity. So what do they pick? What are the trends in various industries? We see all of those instruments and stages as complementary in a company's evolution. On an early stage for a company, no one gives credit to such a company. Intellectual property is not a very good collateral. Only venture investors give money, venture funds, equity funds. So we help such a company reduce costs of finance because public markets often give you a lower interest rate, the less collateral, and often longer bond history than in bank loans. So we think those are complementary operations. In Russia, it's still the 70-30 ratio in favor of the banks. Yes, I think it's because it's not a. It's quite rare, less than 50%, only in the US, I guess. Well, private equity funds, that is small. Bank financing is more accessible. And on the whole, issuing bonds is evolving. If we look at the pre-IPO financing, you design a strategy, you enter the company, you help it raise a cheaper debt to have strategic growth or buy other companies, and then you have the IPO. So this is a complementary evolution. Sometimes the company decides not to have an investor partner and go through the stages on their own. But for us, those are stages of growth. In Russia, there are lots of companies and of all sorts, and unfortunately, by now, in Russia, there are not that many companies that are prepared to become a part of public markets, so not that many IPOs, but I think it will change. Russia is a very cyclical market. Roman Lokhov, member of the management board, deputy CEO for global markets and investment banking services, BCS, Broker Credit Service. Well, respond to what Oleg said about the Russian market, because your company invests even, well, you never reduced your investment, even when the market was bad, because you want to expand your presence abroad, attract foreign investors, not only be a retail broker, but become more and more an investment bank to, well, you are now on the both sides. You attract investors, including private investors. You open funds. You open with the issuers. Please answer, why do you invest so heavily into Russia if our market is quite slow compared to the US market? Well, thank you. I need to say two things, because, well, we don't cover the whole country and rule over it. We are investment banks, see a lot of opportunities, and these comparisons that are drawn, this is not exactly adequate to look at the shares, well, comparing ourselves to the US or to Asian markets, because our capital markets are underdeveloped. Truly, we have no long money. Well, lots of things have been done. The stock market, the last stock reforms through central banks, tax exempts have alleviated the burden much. We had 2 IPOs last year, and we issued bonds for 35 companies, and the retail also started entering, as well as foreigners. But if we look at the capital markets globally, well, in Russia, these markets are underdeveloped, but there is a great potential, huge potential. The question is, like, what exactly is going to happen? For instance, one of the best moments is when you can make these capital markets strong. You can't have a strong economy without a strong capital market. And right now, there are all the conditions to have that. The rates have gone down. Retail investors are looking for profitability. In Russia, companies finally have started looking at, well, you know, when they take out a loan, they want to diversify. And this versus in the title of the panel, it's not correct. It's not versus. Attracting capital through equity, through bonds, through loans, those are just different functions, and normally it's an evolution. Well, a loan, a credit is the simplest form, then you have bonds, then you can have an IPO, and, well, that's an evolutionary process. And in our country, it will take place here as well. Look at the last year. 3 years ago, how much bonds were issued and how much bonds were issued last year. The rates went down. Companies decided to refinance. Roman, you asked a rhetorical question, and you asked it, and I will answer it. You said, how many new bonds were issued, new bonds? Last year, through Moscow Exchange, through bonds, there were 5.3 trillion rubles attracted, which is an absolute record for the whole history of our stock market. And there has been a steady increase from year to year, 5.2 trillion. And this year, it's 4.1 trillion rubles, and it's not even August yet. So well, there are the postponed demand and the postponed supply. Well, of course, there might be someone huge going public suddenly, but what I'm saying is that last year we've placed 35 bonds. If we exclude blue chips out of there, our top companies, it's about 50-50% ratio, 50-50 blue chips, and the other 50% companies with medium capitalization. The 10 issuers issued bonds for the first time with rankings plus B, B minus. So there is this segment in Russia, and companies that are not only about, oil and gas. They're now also looking at the earliest stage. It's the early stage when companies starting to consider capital markets as more mature ones, and we invest in that.
Эмитента, где они стали над этим задумываться. И есть сторона спроса. То, что в России там, конечно, пришел спрос со стороны ритейла и из-за того, что из-за ИСов, из-за того, что перестали платить налог на купон и так далее, видно, что шаги мотивации создания рынков капитала работают. Я все время представляю, что сейчас тот момент, если сейчас очень-очень агрессивно такой адреналиновый шприц дать, то рынки капитала можно очень быстро создать. Потому что есть и предприятия хорошие, и они понимают, что долг надо диверсифицировать, и отложенный спрос тоже есть, как и за границей, так и внутри. Его просто нужно сейчас больше замотивировать и увеличить.
Отлично, спасибо. Теперь давайте перейдем.
Thank you very much. Now let's switch to Mr. Potapov, VTB Capital. Vladimir, please, of course, well, you represent VTB Capital. You shouldn't be responsible, but still you will be. My question is, where is the money, right? Probably like part of the money is still not in the capital in market, is somewhere in some individuals' deposits. I mean, deposits, we have about 25, 26 trillions. Somewhere, under the pillow, some additional money. Well, I guess we come up to about 30 trillion, which is comparable with the capitalization of the whole Russian market, and this can be compared actually to the whole credit portfolio, corporate credit portfolio of the Russian market. But if the deposit is taken from the bank, then its asset base is actually shrinking also, and it's transformed it's actually moved into the shares market, right? So do you have this conflict of interest in your VTB? Please note, they're very successful at that, because now VTB is one of the leaders in improving their share in brokers' operations in the stock market. Well, the question is complicated, and I will start answering from the end of it. We believe there is no notion of advisory, of broker. There is only client with his or her needs, right? And now, after that, we only choose the instrument that we use to solve their needs, right? I believe we are at the avant-garde of this story. We don't believe this competition is actually necessary. Another panels, they are talking about misselling. Well, this brokers' war is already in the past, and this is very bad missell, which actually makes a lot of damage to all of us. Well, I'm here in another panel that's more interested in the sell side of issuers. And I represent here the biggest Russian buy side. You have already mentioned all of the figures, but you didn't mention that actually the savings of the population is growing 10% every year, so that 25, 27 trillion is actually growing also, with another like 4 trillion annually. What comes next? When we try to distinguish, the obligations, securities, like loans or all of that, it all actually depends on capital pools. Whether that's to population, pension funds, endowment, security companies. For them, it's more suitable to invest in financial instruments. For that, we have these bonds. And it's actually growing, well, 1.5%, but still it's a growth. In the balance of corporate loaners, it grows through bonds because, well, this long money capital started forming thanks to the investors we're talking about. So what do we see inside? We see that, well, traditional loans, they remain flat, they're at least not growing. And we also see that this forming base of clients that feel more to invest through public markets make the public market grow at the same time. That's a very unique story. Here we have this fiduciary responsibility for our client. We don't want our clients to be disappointed at us. We don't want our clients to end up somewhere in the Phoenix instead of investing in some kind of traditional or conservative products, as everyone does. I don't see competition anywhere inside. Because, well, for a client, if we are not longer investors, and if we consider the relationship with a corporate client, we would like to know that for that client, it would be interesting to have a diversified base, right? For a bank, it's interested because the orientation to commission profit is growing. The pressure on capital, on assets and on risks is also decreasing. And there are many opportunities arising there, and I see here this opportunity we've been dreaming of for a long time. I see here the forming of long-term investment bases. I see here decreasing of the volatility. I see it all happening. I hope that there will be enough money for everyone, and I only can wish all of us not to, disappoint our investors. Our colleague mentioned here that our corporations, they have balances in some other countries. Well, in Russia, all the balances are quite healthy. We're using this word under leverage, right? From the point of view of investment attractiveness, it's quite attractive, right? Companies, they don't yet see this long money, and that's why for us, as for institutions, the main goal is not to disappoint those who trust broker companies with their money, and we also have to transform these savings in a correct way into economic growth. Sorry for being such, a mess in my speech. No, that was a good speech, very optimistic. You weren't actually protecting this banking credit. And by the way, we have here Mr. Irakli Mitibilishvili, who's the managing director of the Corporate and Investment Bank in the Citibank in Central Europe, Middle East, and Europe and Africa, if I'm not mistaken. It says CEEMEA here. Well, you are a representative of a global bank, right? It was always very bad with IPO in the Russian market, both for large and medium companies, because large global banks, they are interested in like 15 to 20 maximum names in Russian businesses, and only in the biggest ones, right? And you demonstrated us that this is wrong. You brought several companies to IPO last year. Why are you doing that? And how do you see this problem? Whether we have a credit company, or we have credited company, or we have or whether we have a country of a developing capital market. Thank you for giving me the floor. I think there are two questions here. First question is, why did we start to work with SMEs, right? And this, deals in share market with SMEs. And the second issue is this credit, asset ratio. Well, it's very interesting as well. I would start with the first one. For us, it was an experiment to a certain degree, and not necessarily everybody approved it within the bank when we started doing that. But why did we start actually doing that? These very specific cases. There were two companies, Obuforsi, like Russia's Choose. We were doing that together with this colleague here with the BCS. And there was another company less than several thousands of dollars. It was called Global Truck. We just like their businesses, because what is important for an investor? For an investor, the story matters. And the story was there. People were there. People who were able to really bring to life everything they promised. Those are very enthusiastic people, and they were brilliant. And we've seen an investment society welcoming them. Despite the very limited assets that those companies were offering, we were sure that the investors would like that, and they would like to become investors. And we were right. Despite quite a lot of complications during those deals, their behavior after the IPO could be much better, unfortunately. But still, there is no regret here, and we continue doing this kind of work with SMEs, and we're looking at deals around like $100,000. We believe this is an important segment of the market. Another thing is that I've been in Citi for 20 years already. When I started working there, I didn't even think of being a member, like part of this Citi group. in 20 years, but in this period of time, I became a witness of many things. I never thought of witnessing, first Euro bonds issued by us, but still, the first and last Euro bond actually happened here in 1997, I believe. But well, I managed to live till this moment, and I'm just saying that we have a long-term perspective, and when we start working with a client, we want to follow all of their life cycle, all of their growth cycle. You mentioned here, Mats mentioned here that the different IPOs, right? And I remember the pictures, how they started, I'm not talking Yandex, I'm saying Microsoft, right? You remember those nerds sitting there like many years ago, and there is like a picture with an inscription down there. Who would have thought about trusting these people with their money? And look where these guys are now. I believe there is always place for this kind of optimism, and we are quite optimistic here. Now coming to a broader topic, I want to say that banking credit and capital markets are very different, and you shouldn't compare those. It's very important to understand where does the regulation go these days, and especially since Basel III was adopted here in Russia, especially that moment. And in Russia, we do have a certain review of Basel III, which is different from the States in Europe. We still have a certain provision of Basel III, and I think at a certain point we will adopt the full-fledged Basel III. And well, Basel III is about many things, including about the liquidity. And it's about regulation and banks. And actually, the regulator tells the banks, it tells them, well, dear banks, everything you do is about short-term and mid-term crediting, because the regulator minimizes the credit perspective that has this long-term, more than 5 years. If there are some kind of assets, this kind of assets on bank balances, starts to grow significantly after this period of 5 years. And well, why this is necessary? Well, obviously because you don't want to have too many risks within the banking system. From the point of view of the regulator, this is all clear. But everything beyond 5 years, please, you're welcome to the capital market. And in this regard, banks, well, I'm not talking about Russian reality right now, because this is probably going to be Russian reality a bit later. But in continental Europe and the United States, this is a reality already. We see that in our own company, there is a very strict limitation on the internal capital for the assets that remain on a balance for more than 5 years. And this is what actually pushes us and our clients towards capital markets. And I believe that this is going to work out somehow, whether this is good or bad. It's too early to say. It's more a philosophical question right now, and probably the answer would be different in different points of time. But, well, it's obvious that the markets of debt capital, especially the large ones, they will always be there. There is not a single economy without debt capital, right? I read somewhere that, and I liked it very much, that one of the American politicians, he told that he'd like to be reincarnate in his next life as a bond capital market. Answering the question why, he said that then I would be able to threaten everyone. Well, that means that look at what we see in Italy right now. Politicians' reaction to everything that happened in their market. Well, they probably have quite a good market because, you know, this market is not the most threatening in Russia yet. Yes, this is very threatening part of the market, and this actually played a crucial role in the history of Russia. well, there were different cases that had quite significant consequences, both economic and political ones. But if we have a look at general trends in bond markets and in their general influence on economic and political life, it's a very significant one. Thank you very much, Irakli. I believe it's always very important to talk about coming out to the market, that this is not only about IPO, that IPO is just the start. It's like when small kids are usually very happy with two protagonists of the story living happily ever after, but we are adults and we understand that the real life actually starts exactly there. And quite often, as it happens in our discussions, we are talking a lot about intermediaries, financial intermediaries. I'm one of this kind of intermediaries. And there are many economical, legal intermediaries and many other kinds of those. And now, at last but not the least, we are now going to give the floor to a real-life issuer who declared that he would start issuing bonds and he would start going to IPOs. And you'll see that there are real-life, nice-looking issuers here in real life. Please, Svetlana Balanova, Chief Executive Officer of the IBS company. Why would you do that? Well, despite the fact that we're already a public company, we're not issuers yet. We're not issuing anything yet. We've declared about our wish to go to IPO, but you know, every time when we start thinking about investing in our growth, we consider every opportunity. It's bank credit, it's access to public funding. But as it has already been mentioned during this panel, that for IT companies and generally for technological companies, this public status and the access to public equity, it's the most natural way to invest in their growth because, well, we are the business built on human resource entirely. We almost don't have any other kind of resources in our company. And for us, it seemed most natural in capitalization, in order to achieve capitalization for our shareholders, it seemed most natural to motivate, to achieve this long-term motivation. That's well, easier to be done through the stock options plan. There are many different ways to do that, but for us, this IPO of ours is the strategic way to finance our future growth. Because we believe that the growth will be there. We've demonstrated substantial growth in the recent several years, and we believe that there is for us a space for further growth, both organic and non-organic in this market. And we need financial support for that, right? We need financing. But first and foremost, we need people who work in our company. We need them to understand how they could add value for our shareholders. And for us, the most natural seemed to go out to the public markets. So this publicity that you actually have to pay quite a lot for, because, well, you need to create a certain department for work with investors. I'm not even talking about the deal itself. I'm saying about the work that starts after the deal, because you have to keep up with the standards of corporate management that always become more and more complicated. So you think that pays off with everything you just mentioned? Well, we might be kind of unique in this sense because we are the subsidiary of the company that has already been public company when under the French stock market. So we had a good example already. And when you know probably that part of our group, they went to the New York stock market, Luxoft, that actually is now there. So kind of spin-off happened, and then happened this delisting with IBS Group in Frankfurt. So this part of IBS system that is now public company and would like to go to Moscow stock market, that part of the bigger group, we decided to keep all the corporate management, corporate governance rules, the transparency standards and everything that existed in the bigger company, right? So for us, this new exit to the public market is easier and more natural than for many other potential issuers. On the other hand, we believe, especially considering that we plan to go to a sector of the Moscow stock market, I'd like to define that acronym is the market of innovations and investments. This high technical sector of Moscow stock market, we plan to go there with our IPO. So we believe for us it's crucially important to keep up with that status of IT leader that we managed to, achieve on our market. Because, well, generally speaking, there is no public IT and internet companies in Russia yet. And we believe that we are kind of setting a new standard in the marketing area, right? Both for the market and for our clients. We demonstrate to our clients that we are a serious company with serious growth potential, that we're very serious about our corporate governance and about our environmental standards and policies. So we believe that this HR together with marketing and this access to capital market, it will pay off very soon.
Thank you, Svetlana. Now let's talk about the other party or the other side of this deal. An issue is oriented towards the demand, and it's not only demand searching for new products, which also happens. Let's talk about the demand, Mats, sorry. Don't you feel that this inner demand on the emerging markets is mostly represented by retail demand, that institutions of a collective investment on the emerging markets are less developed than on the core markets? So how do you think? What are your impressions here? So when the private investor becomes more active, through direct investment in such products, that such kind of activities for emerging markets, that it's a good sign for emerging markets, a good sign of development, and maybe the key sign of development.
Well, investors, whoever they are, need to make their own decisions. But I believe that the strong public equity markets that have developed hand in hand with the building of strong, large institutional investors. I mean, I think this is incontournable, as they say in French. This is a very strong relationship, and I think there are some structural developments that we need to keep in mind if we look 10, 15 years ahead in terms of what our stock markets will look like. I mean, they will be, on the demand side, as you said, characterized by large institutional investors, pension funds, private, public, insurance, etc., etc. They will not be less indexed than they are today. That's another factor to take into account. They want liquidity, and they want a large spectrum of companies. Some of the biggest advocates for more IPOs are actually these large institutional investors. I talked to the Norwegian pension fund, the large sovereign wealth fund, and they are pretty desperate because they're running out of companies to invest in, because their fund is growing all the time. Soon they own 2% of every European companies, and they feel this is too much. And they want more IPOs, or they want to go private, and they're not allowed to. So I think that's one thing. On the thing on retail investors, I don't think long-term that retail investors is a sustainable basis for a very functional sort of public equity market. But there is another trend that I think we should look out for, and this is the increasingly blurred line between what is a publicly listed company and what is a private company that is traded. If you look at the United States today, I mean, there are a number of fairly large corporations that are not really publicly listed, but their stocks are quite liquid and traded in big chunks between either private offices or institutional investors. And I think that this is a development that we will see more and more of. If you go into NASDAQ, there are even sort of matchmaking sites that can help you do that. It needs to be a bit regulated, I suppose. Look at Spotify. How did they get to the market? You know, they didn't even sort of make an IPO. They just showed up and said, "Do you want to trade us?" And I think that is a development that we need to follow. So to answer your question, I think that we touched upon it before, and that the building of proper institutions that are qualified, sophisticated, and can make money by serving clients in giving them access to public equity markets. They need to be there. They really need to be there, and they should be there. And everything from mutual funds to insurance companies, pension funds, and investment banks should really be the promoters of equity market, because there's actually money to be made.
Ну, вот на таких бурно развивающихся рынках, как Китай, как Малайзия, как
On the fastly growing markets as China, the Brazil of 10 years ago, retail demand was decisive, and now in the US it's more than 90% investments are made through collective investors. In the beginning of 2010s, it was only 7% of collective investors. Maybe that's our development as well, and I have Vladimir and Roman, who, well, they work with this new type of client. Again, for the last year, there has been the largest number of new broker accounts opened ever, 250,000. Since the beginning of this year, more than 120,000. Well, who are those people? They do create some kind of demand, and there will always be a supply. Vladimir, you answer first, and then, well, who are these people? How are they differ from these brave people from the 90s or from the greedy people of the 2000s? How could you describe them? Well, thank you for advertising me. Just a couple of words. Well, who is the client? It's the traditional people who want their deposits. Those are traditional investors with low risk tolerance, and the task is not to disappoint them. I'd like to give a light feedback. Well, I wouldn't think too much about, collective investment, individual investment. I think, well, what does it matter? Anyway, it's about savings. If a client invests directly through a broker account or through a fund, or well, there's no difference actually. Both of them deal with population saving, and it might be unit investment funds, and that's just the movement from the demand to the supply. And we'll ask Roman about that. Why brokers often write in their advertisements saying that, well, instead of investing into financial market, you might be able to trade on the stock market. Well, bonds. Well, bonds, is it a service or is it a product? No, I'm always saying that it's an instrument, not a product, not a service. Well, it pleased me to hear Svetlana Balanova, this dialogue between the investor and the issuer. It's a two-way road, two-way street. Until the issuer understands why they need a public market, the investor and the issuer will never hear each other and never will meet, in a sense. And there was, again, an important thing mentioned about option plans for the management, giving them bonuses in shares. I mean, and that incentivizing them to contribute to market capitalization. So I'd like to talk a little bit about what is it and why it's important. I mean, I like the fact that private companies do that and that state-owned companies do that. And until we have this critical mass of proprietors, top managers who would be interested in, well, real, let me repeat that, real evaluation of how much their company costs and how they really perform. Because, well, let's go back. What is the owner's goal, be it state or a private owner? It's an increase in business value and how much your business is worth. And otherwise, well, if the owner is afraid to look into the mirror and to say honestly, well, that I'm worth this, I'm worth, well, that tomorrow, well, you have to be sincere with, well, you know, one of the, you know what might happen to businessmen, including oligarchs. I won't name names if they don't have this sincerity. And the world standard of assessing a business's worth, it is, well, kind of in place. And often managers don't want in no way their remuneration to be linked to the real or produced worth or value that can be only expressed in an increase of stock price. Though it's a unique tool, it's very beneficial for a company when you create property. The market pays for it, not the company. It doesn't affect P&L. All of the investors want to sit in one boat, and for the motivation to be aligned with the management, I mean investors' motivation, and many other beneficial facts. So this mindset shift that is taking place when owners and top managers and shareholders of a company are not thinking that an investor is just, you know, someone you have to fool, you know, you have to, when you understand that you are going to sit in one and the same boat for years, at least for 3 years or 5 years, though this is the average duration of a program, and serious funds are allocated. Well, in that case, we'll have happy investors, and our task is to generate them, produce them. And on the other hand, we'll have good companies, motivated managers. The same managers will be able to officially earn very good money, generate value, and then spend it, realize it. And who pays for that? The market pays for that, together with the investors, and the overall, well, the general wealth will be increased. So that's the road to our bright future. Well, thank you, Vladimir. But I'd like to ask from you and from Svetlana. The stock price changes not only, or grows or decreases, not only because of the management's efforts. There are also outside external circumstances like exchange rates or, well, dollar exchange rates, sanctions, if we think of last events that affect the whole market, even for the companies that are not under sanctions. So one might get a little bit disillusioned with this beautiful story that you are telling. You know, there is this phrase about an efficient manager in a bad industry. There is a saying that in a very bad industry, even if you are a genius of a manager, you won't do anything good, you won't achieve anything, because you will be overwhelmed by the external circumstances. Well, that means that you just chose the wrong industry. Well, so that's well, we're not talking about salaries or wages here, that, you know, people starving or not being able to pay for your kids' college. No, we are talking about long-term, serious motivation. A manager has to think, well, I'm making a long-term contract with this industry, with this company. I assume the risk of external factors, and I will receive my reward, my remuneration if everything works out, and I won't if it doesn't. Well, I think for me it's a little bit easier, because I am definitely part of the industry, of an industry which is most potential on the whole market. Well, there are risks for the people who work. in such a program. But these risks are very short term. And we said that the markets work and operate in cycles. And when you are part of an industry where you are in any case guaranteed that the industry will grow unless World War III starts. So basically, you are quite confident in believing that the stocks of your company, the stock of your company, if you invest in it, will only grow, especially if you grow better than the market does. Better than a well-growing market. So in that case, in our case, I don't really see these kinds of risks. Well, you see, it's a perfect case. The money goes to the industry where there is growth, where the managers are best. Adam Smith, at its best and purest. What I like specifically, that representative of a bank and representative of a money consumer agreed that one should go to equity and into equity. Again, well, I'm going to say another optimistic thing. We have just calculated how much an investor would get who would invest in a ruble deposit in a long-term perspective, 15 years deposit. How much would he get? What a return would he get? What return would he get from a state bond? And what would he get from the Moscow Exchange index with interest? For the 15 years, ruble deposit is at 286 return, bonds 384%, shares 979. Well, I'm not saying that in short-term perspective there are no risks at all. Well, Roman is so eager to talk. Well, let me comment. First, there is a difference between owners and managers. They have different interests, and well, we might wait for everyone to have this honest look in the mirror, and the market will restore itself. But I think you need to incentivize. Like on the exchange, like on the fund market, on the stock market. That's our strategy. So that's how we made 30 companies. We gave the 30 companies this exit. For instance, let me give you one example now. Someone has a choice of, take a loan, issue a bond, and now, anyway, is exactly the time to give the owners a kind of a push. IPO requires corporate governance, certain changes in the structure of your company. But if throughout the next 2 years you will obtain a ranking, let you have a top 5 audit, we will subsidize that for you. We'll get you an anchor investor. And when you enter the market, and the investor and the company both will have tax exemptions, that will be an additional push to create capital markets. And there are many measures like that.
В принципе, есть там...
To be honest, there are like 3 key things that happened, like in my understanding. Investors are all people, like we and all of the population. And I wonder why now there is more interest. And there are several reasons for that. Of course, in the 90s, in the beginning of 2000, people who came to the market were exactly those who wanted to do with that, who wanted to get some quick money. That was a substitute to a real work. People who invested in order to receive dividends or to create a diversified portfolio in order to get some return. There were not so many of those, and now we see a lot. First, because the interest rates are falling down. We have been discussing this already today. For a Russian, an average Russian really does not understand quite well what's like a 2-digit interest rate for a deposit. That was something very, very weird to understand. Now, of course, people are looking for profitability, which you can't anywhere get without certain risks. And here we come to diversification. And it's not only diversification of instruments and companies, it's also by companies and sectors. So we have a decrease of interest rates, Second reason, additional motivation. You know, this no tax on coupons, which is for private investors, is another motivation. And the third reason is simplified access, I'd say. Before, like 10 years ago or 15 years ago, in order to go out to the market, one needed to put a lot of effort, you know, to have a screen, to buy and sold a lot of stuff. It was very complicated. And now, Alexander told us that, you know, to open a bank account, that was it's the easy thing to do. The best example was with Tinkoff. Of course, everything went to digital. And like now, they're having like 700 accounts opening daily. And I believe this situation will be transformed 100% in a couple of upcoming years, because the opportunity to invest in financial product, to counsel into financial product, I would like to stress, it will be accessible for everyone. It will be available for every people, whether they want that or not. Right now, we have 5 very large contracts with very large networks that are about the opportunity to invest for like 5 to 6 million people. Right now, only 1.5% of the population are registered on the stock market and have any access to the investment. I mean, this 1.5% is nothing, but it will change 100% in 2-3 years in the future. I might, you know, install a certain app on my iPhone and buy a certain financial product. This simplifies it so much, and if it will remain as easy as it becomes, we would be talking about totally different number of people using this financial instrument. But we still have to understand that this should be people interested in long-term returns, and this will improve diversification. Of course, nobody will ever fully retire from deposits, right? Because, well, it will be enough to have a look at the rest of the world. I mean, let's take Germans, for example. For Germans, it's always either mortgage or deposit. Some of them, yes, they have shares, but, well, it's a very small share of those who have shares. It's very different in America. I believe in Russia we'll have something in the middle. Mats wanna, I see, say a comment because he heard something. He wants to comment very badly. I'd like to give him the floor now, and then I'd like to give the floor to the other participants. And meanwhile, can you please bring up the polling right now, the vote? We have prepared the vote for you. Please, Mats.
No, I just wanted to make a short comment on this retail and institutional issue. Of course, everybody should be welcome to the public equity market. I mean, there is no discrimination here. And you mentioned the trajectory of China, for example. But what we also know from experience in China with rather small free floats and lots of retail investors was extreme volatility. And that actually have hurt the Chinese markets a couple of times in the not so distant history.
Вы волатильность произносите в смысле?
By volatility, you say volatility in a negative way?
Well, I'm just saying that there is a certain correlation between small free floats and lots of retail investors and extreme volatility at times that actually the authorities had to put to a halt. The other side of the story is
Просто нам на бирже нравится.
Because we like it in the market, in the stock market.
a lot of these things can actually be taken care of by the institutional investors by funneling the money of retail investors through different products. And once you are in an index like that, your company will not be subject to the same kind of volatility, which most companies actually hate, as if you are a small free float and just a lot of retail investors. The other aspect of having a lot of retail investors, and this may make you happy, I think there is a tendency still among policymakers and regulators to regulate our public equity markets as if all investors were widows and orphans that cannot take care of themselves. And maybe I shouldn't say this, but I talk on my personal capacity. I think sometimes that this has led to a certain over-regulation. Because in most sophisticated markets, investors are totally capable to take care of themselves. At least they charge their clients as if they were capable to take care of themselves. And I think that, but I think also it's true. They're fairly sophisticated, they know what they're doing, and some of the regulation that is really in place for totally illiterate people could probably be abandoned in such markets. And that may also facilitate for issuers, and it would facilitate also for investors.
Спасибо. Олег,
Thank you very much. Oleg, let's now give the floor to Oleg. What's your view? Well, did you vote first? Did we vote? Please, let's vote. So we've numbered 5 different sources of financing for Russian markets. And the question was, what source of those 5, in your opinion, will be developing faster than others? We've demonstrated you those 5 sources: public shares, private capital, private equity, public debt, banking credit, and, well, let's call it financial development institutes or public institutions financing. So in your opinion, what will win? And while you're voting, and please, would you please be so kind, dear organizers, to bring up the results of the voting here on the screen? Oleg, please. Well, coming back to the main question, in my opinion, participation of the private investors in the capital market is the main driver. There is a trend of making information for private investor more transparent. There is another trend of educating this private investor. By the way, I invested in banks. There was even bank fund in 2005, but then we stopped doing that, to stop investing in banks. In Russia, banks are kind of very slow to react in the changes to corporate sector, meaning that when the private investor takes out the deposit and investors in the bond, does he helps developing the good company faster than the bank does. That's why I believe that the more private investors use different, whatever kind of instrument to invest in various financial instruments, the more of those, the faster will become the development of the economy. And banks, well, they just have to modify their systems quicker. They have to be more flexible, to introduce fintech, etc., you name it. And so I believe that the private investor would make market more volatile, which is a good thing for stock market and for other funds and brokers and other market actors. I believe it's a good thing, and it's a pleasure for me to see in Russia these trends. We see millions of people not throwing money into forex, but in some more organized form. Money are sent to venture capitals, to private equity, etc., etc. That was kind of a joke. I was joking a little bit when I told that volatility is always good for the market. It's not always a good thing. At some point, yes, it gives you a certain growth, but very soon it comes up to a long-term disappointment of the investor, and no one likes that. And neither we like these bubbles, because, well, when investor is happy, the issuer is happy, but this only happens when there is a certain balance between volatility and stability of the prices. All right, let's give a floor to Vladimir, because he's going to be late to a plane. He might actually run out of the room at any moment. Jesus Christ. Public debt of bonds. So half of the people, more than 1/2 of the people, have voted for the public debt market and for bonds. So we see here, that's an interesting, the most public together with the most, with the state part. All right, so from volatility, I'd like to go to the essence of our discussion. I mean, every investor actually looks at the risk-weighted return index, and here volatility is very applicable. So if the volatility grows, then the attractiveness of the market is worse for any investor who has at least graduated from high school. I'd like to give you an example that we have about $2 billion in foreign investment in the managing company. Everyone is asking 3 questions. Everyone knows that the credit quality of Russian companies are quite well, that the dividend return is quite good one. Everyone knows that there is certain sector, for example, for the IBS company, that can be very sustainable in its growth for another 5 years. So there are 3 questions that we ask everyone. First is geopolitical. I'm not going to say it. Second question, what will happen to the ruble? And the third one, what will happen to the volatility of your market? And who are going to be the investors who would support the market if we will need to run out of there for some reasons? So what conclusion can we make from this situation? The conclusion is any investor, be it private or institutional investor, any investor, if he actually agrees to the risks he takes on and if he understands what he buys, it's a good thing for us and we need to develop that. I remember that discussion, the market of asset management, that was very interesting. And, well, it was yesterday, like the 0 day of the forum. That session happened yesterday, 10 in the morning. Not many people were present. So I'm trying to say that there was an interesting discussion. Managing companies were saying that, well, why do they doing this? I saw on broker companies. Why don't they do that with managing companies? Well, until people start differentiating, nothing will happen. Well, there is a client for brokers, there is a client for managing companies, and well, it's all mixed up together, and people do not really understand, and it will be a mess until people start to differentiate all of those financial instruments. And when we're going to be very well financially educated, then we will not receive any more these kind of questions about volatility. And our colleagues today gave you plenty of examples of actions, of shares, going up and down, because there is this mis-sell, because who do you sell stuff to, right? To people who needed bonds. Well, okay, you send them the obligations promising that it's only going to grow, and well, okay, now that you have to pay for everything that you do at some point. So Oleg was very right to say that the level of education, the level of regulation, and accordingly the level of the responsibility of the companies for everything that they sell is, well, still not very good. So we have to improve that to step to the next level. Vladimir, thank you very much. I suppose you have to leave right now to the airport. Well, you have a chance to have a look at the beautiful St. Petersburg in those beautiful traffic jams. So you can be excused if you need to go. All right, now, Irakli, please, from your experienced point of view, and you don't only have Russian experience, but also foreign experience, you're still working on the foreign markets that sometimes are similar in something and then similar are not similar to us, though might be geographically quite close. So what else has to be done? For what? For general happiness? Yes, for general happiness. That means, capital winning. Yes, I think it's a correct thing. By the way, I applaud to people who voted. I would respond the same way, actually. I am surprised of how well financially educated people here are. Well, let's go back to culture. Share is a very complicated instrument for an understanding of a common public, and Vladimir told a lot about that, and we all understand that. And it's still kind of difficult for Russian issuers. Well, that's a fact, and it will take some time. I would like this to happen already, but it is happening. It's kind of an economic evolution. It will still be there, and it's a healthy and natural self-regulation mechanism. But nevertheless, in the long term, we would see a very simple thing. We should not forget some very simple basic things. This is all starts with the needs of the issuers. The issuers define their strategy, product strategy, business strategy, innovative strategies, expansion strategies. And everything that we do, we offer them a set of resources, and it's up to them to choose what kind of resources they need to achieve their goals.
So why we have more debt than share capital? Because debt is cheaper, and that's how it's gonna be. We'll see the same picture. I wonder, some statistics from my personal analysis. In a normal year, Russia consumes, roughly $100 billion of capital if there is no external shock. And how does it distribute? I mean, international capital, not domestic capital. 50 billion are Eurobonds, while up to 10 billion, up to 10% are shares and share capital, and everything in between are various forms of banking loans, in many of its forms, project finance, which dominates in Russia. Well, that's a very similar picture, and it doesn't surprise me at all. Well, probably that's the way it should be for a while. And dear colleagues, now you have an opportunity to ask one or two questions. Well, simple. I wanted to ask you, Irakli, or everyone. No, I don't know. I don't care who answers. I want to ask about you. You mentioned the growth of the debt market over the last year or two, but no one mentions that the number of issuers does not increase. I mean, a number of debt issuers. Well, this one does increase. You mean share? Yeah, there is an increase of sorts. There are more issuers, but according to the data by the year 2017, we have. Any entity can issue bonds, not only public entities, but those are 15,000 public entities, more than 3 million share entities. Now we have 332 bond issuers and 226 shares issuers on the market. So there is this huge potential on the market. And the question is, how do we incentivize people? How do we explain what is the problem? I mean, marketing. You ask about marketing? Yeah, yes. I'll try to start explaining, opening. No. I abuse my power of moderator here. No. Well, does anyone or who out of the panelists wants to answer the question? Well, I'll start and you'll continue. A philosophical question, isn't it? No simple answer to it. If you want a philosophical answer to a philosophical question, I'll tell you the following. You have to build up trust. That's it. Trust. That manifests itself in trust towards the regulator, the rules of the game. The rules of the game need to be respected. That the governance should be a good governance. That politicians should be honest. It's all about that, isn't it? So if we see that, if trust grows and builds up, there will be a fantastic or an explosive growth in our markets. I would like to add that according to the statistics, and it's again about trust, and well, one of the millions of companies, entities, you have, well, look at two parameters of the entities you mentioned. How many of them could have be on an S&P ranking at least B-B? And then look at the statistic, whose audit, is done by top 10 auditors. Then the circle of entities that can issue bonds or debt will shrink. And Irakli mentioned that even the deals that share deals $70, $100 million that we thought that were small deals, you'll see that there are these B ranking companies with more than 6 million rubles profit per year. You will have 700 companies of that kind. But these numbers increase as the people become more educated, more literate, and that's the task. I mean, good governance, good audit, good ranking, and then going out into the market. Well, you can't just issue instruments and sell it to anyone. I mean, because instead of capital like that, you might generate crazy risks. So, well, again, simple questions always require more time to answer. I completely agree with my colleagues, and I can only add that this increase in trust is a very long step that consists of a very long way that consists of many steps. That's marketing effort by our brokers, for instance. Market participants, well, we have to thank them for what is going on in the markets. They invest huge funds. They don't leave the business. Brokers companies, they're all private, and they don't they don't make a flight towards safer industries. And this, again, we have to thank the regulator for that, because the legislation is at a very decent level right now. And it is often said that our infrastructure has improved a lot, but we lack the marketing. We need additional marketing. We will have another fair where all the market participants, banks and brokers, it will be held in Moscow in September. Please visit, and I wonder whether the same people who were there last year will come, or new ones. And before we close the session, well, again, abusing my rights of the moderator, I'll ask the last question, and I'll ask Svetlana, when are you coming to us? Well, it was already said today that no one should try and predict global markets. It's no secret that we are very well prepared. We have already announced our intention to go public. But that will depend on the investors' moods towards Russian markets, Russian risks, and their attitude towards emerging markets in general. And I hope that there will be positive political and economic developments that will keep. Well, we know the market has raised compared to April, but still probably not to the level which would be very beneficial for new IPOs. We are very eager, and we are expecting to become part of the Moscow exchange. So, well, I thank the panelists, and I thank the audience, thank all of you, and the panel is over.